A young couple decides to invest in their first rental property. They start with a modest budget, but through strategic choices, they watch their investment grow. What if they can turn that initial risk into a thriving business? As they navigate the ups and downs of the real estate market, they discover powerful strategies that set them apart from the crowd. They learn about leveraging assets, understanding market trends, and finding hidden gems. Each decision becomes a building block in their wealth journey. But it's not just about buying properties, it's about cultivating a mindset geared for success. Could adopting the right mentality be the key to unlocking hidden potential? Stay tuned as we explore the essential tips that can transform beginners into savvy investors, ready to build their real estate empire. But before we begin, subscribe to the channel. If you want more money in your pocket and successful investments, this is where you'll learn. Turn on notifications, and let's get started. Understanding the real estate market. When diving into the real estate market, it's crucial to grasp the current trends. The market can change quickly, influenced by factors like the economy, interest rates, and even demographics. Keeping an eye on these trends helps investors make informed decisions. For instance, an area experiencing job growth and an influx of new residents may be a hotspot for property investment. Understanding these factors can give you a leg up when looking for opportunities. Not only should you look at trends, but also the types of properties available. From single-family homes to multi-unit buildings, each type has its pros and cons. Some investors prefer residential properties for stable rental income, while others might find commercial real estate more appealing due to potentially higher returns. Identifying the type of property that aligns with your investment goals is essential for success in this space. Location is another key aspect of understanding the market. Certain regions may be more promising than others based on various indicators. Urban areas often offer more opportunities due to higher demand, but emerging neighborhoods can provide great investment potential at a lower price point. Researching these areas will help you identify the best locations for purchasing properties. In addition to trends and locations, it's important to consider the competition in the market. A thorough analysis of similar properties can reveal the average pricing and what features are in demand. This information helps you position your property effectively, whether you're buying or renting it out. After all, knowing what others are doing can give you a strategic advantage. Lastly, staying updated with market reports and forecasts can provide valuable insights. Many resources are available, from online platforms to local real estate associations. By keeping your finger on the pulse of the market, you'll be better equipped to make sound investment decisions that can lead to profitable outcomes. Financing and budgeting. When it comes to financing a property, there are multiple options you can consider. Traditional mortgages are the most common, but there are also alternative routes, like hard money loans and private financing. Each option has its own set of requirements and interest rates. Understanding these can help you choose the best financing method for your needs and financial situation. Calculating initial costs is another vital step in budgeting for real estate investment. This includes not only the purchase price, but also closing costs, property taxes, and any renovation expenses you might anticipate. Having a clear picture of these costs will help you avoid unexpected financial burdens. A well-detailed budget ensures you're not caught off guard once the deal is finalized. Maintaining a healthy cash flow is critical in real estate. This means keeping track of ongoing expenses, such as property management fees, maintenance costs, and insurance. By accurately forecasting these expenses, you can prevent cash flow issues down the line. It's essential to build a reserve for unexpected costs, as properties can sometimes require more attention than initially anticipated. Another key aspect of financing is understanding your credit score. A higher credit score usually means better loan terms, so it's wise to check your credit report before applying for financing. If your score needs improvement, taking steps to enhance it can save you money in the long run. This can include paying down outstanding debts or ensuring bills are paid on time. Lastly, consider consulting with a financial advisor who specializes in real estate investing. They can help you navigate the complexities of financing and budgeting, ensuring that you make choices that align with your long-term financial goals. With the right guidance, budgeting for your investment can become a more manageable task. Choosing the right property. Selecting the right property is a critical step in the investment journey. Start by defining your investment goals. Are you looking for a long-term rental, a property to flip, or perhaps a vacation home? Knowing your objectives will help narrow down your options. It's essential to consider how each type of property aligns with your goals, as not all properties will serve the same purpose. Location is a key criterion when choosing a property. Properties in desirable neighborhoods tend to appreciate in value more rapidly. Look for areas with good schools, public transportation, and amenities, as these factors often attract more buyers or renters. Researching the local market can help you identify neighborhoods that are on the rise and worth investing in. The type of property is another important consideration. Single-family homes, condos, and multifamily units each come with their own set of challenges and benefits. For instance, multifamily units can generate more rental income, but may require more management. Understanding the pros and cons of each property type allows you to make a more informed decision. Potential for appreciation is a critical factor as well. Look for properties that have a history of increasing in value or are in areas set for future growth. This could be due to planned infrastructure projects, new businesses moving in, or overall economic development. A property with strong appreciation potential can significantly enhance your investment returns over time. Lastly, conducting thorough inspections before making a purchase is crucial. This ensures that the property is in good condition and helps you avoid costly repairs later on. A professional inspection can reveal hidden issues that could affect your investment. Being diligent in your property selection process sets the foundation for a successful real estate investment journey. Investment strategies in real estate. When it comes to investing in real estate, there are several strategies that one can adopt. One popular approach is the buy and hold strategy, where investors purchase properties and rent them out over time. This method allows investors to benefit from rental income while the property's value appreciates. The key here is to buy in areas with strong rental demand and potential for growth. Over the years, this strategy can lead to substantial returns, especially if the investor is patient and chooses properties wisely. Another strategy gaining traction is the flip method. This involves buying a property, making renovations, and then selling it for a profit within a short time frame. Flipping can be quite profitable, but it also comes with risks. Investors must accurately assess renovation costs and market conditions to avoid losses. Timing plays a crucial role in flipping. If the market is slow, the investor may end up holding onto the property longer than anticipated, eating into potential profits. Short-term rentals, like those offered through platforms such as Airbnb, have also become a popular option. This strategy can yield higher returns compared to traditional long-term rentals, especially in tourist-heavy areas. However, managing short-term rentals requires more effort. Property owners must handle bookings, cleanings, and guest communications, which can be time-consuming. Still, for those willing to put in the work, this strategy can be incredibly lucrative. Long-term rentals remain a staple in real estate investing. This strategy involves leasing properties to tenants for extended periods, typically 1 year or more. It provides stable, predictable cash flow, which can be beneficial for investors looking for steady income. Additionally, long-term rentals usually require less hands-on management compared to short-term rentals, making them appealing for those who prefer a more passive investment approach. Ultimately, choosing the right investment strategy depends on an investor's goals, risk tolerance, and the amount of time they can commit. No single strategy is a one-size-fits-all solution, and many successful investors often blend various approaches to maximize their returns and reduce risk. Property management. Managing a property effectively is crucial for maximizing return on investment. One of the first things to consider is tenant management. Good tenants can make a significant difference in your investment journey. It's important to conduct thorough background checks to ensure potential tenants have a history of reliable payments and care for properties. Establishing clear communication channels can also foster a positive relationship, making it easier to address any issues that arise during the lease. Regular maintenance is another key aspect of property management. Investors should set aside a budget for routine repairs and unexpected issues that may come up. Regular property inspections can help catch minor problems before they turn into costly repairs. For instance, checking the plumbing or HVAC systems periodically can prevent significant breakdowns down the line. Keeping the property in good condition not only retains current tenants, but can also attract new ones. Investors might also consider hiring a property management company, especially if they own multiple properties or live far from their investment. These companies can handle everything from tenant screening to maintenance requests, allowing investors to focus on other ventures. While this service comes at a cost, many find it worth the peace of mind and time saved. Another aspect of property management involves understanding local rental laws and regulations. Landlords must know their rights and obligations to avoid legal troubles. This includes understanding how much security deposit can be charged, the process for evicting tenants, and what constitutes a habitable property. Staying informed about changes in local laws can save investors from potential pitfalls. Finally, effective marketing strategies are essential for attracting and retaining tenants. High-quality photos, detailed property descriptions, and promoting through various channels can make a property stand out in a crowded market. Keeping current tenants happy is just as important. Offering incentives for lease renewals can reduce turnover rates and maintain a steady cash flow. Legal and regulatory aspects. Understanding the legal landscape of real estate is crucial for every investor. Local laws can significantly impact how properties are managed, what is required for leases, and the rights of both landlords and tenants. For example, certain jurisdictions have rent control laws that limit how much landlords can increase rent annually. Being aware of these regulations can help investors make informed decisions about pricing and tenant management. Zoning laws are another critical aspect to consider. These regulations dictate how properties can be used and what types of structures can be built in certain areas. Investors should familiarize themselves with local zoning laws to ensure their plans align with legal requirements. For instance, converting a single-family home into a multifamily dwelling may not be permitted in certain zones, affecting potential rental income. Tax implications also play a significant role in real estate investments. Investors must be aware of property taxes, income taxes on rental earnings, and any available deductions. For example, expenses related to property management, repairs, and depreciation can often be deducted, providing tax relief. Consulting with a tax professional can help investors navigate these complexities and maximize their financial returns. Another area to keep in mind is liability. Property owners can be held responsible for injuries that occur on their premises. Therefore, having adequate insurance coverage is essential. Liability insurance can safeguard investors from costly lawsuits and damages, providing peace of mind as they manage their investment properties. Lastly, staying updated on changes in laws and regulations is vital. Real estate laws can shift, impacting rental agreements, tenant rights, and property management practices. Joining local real estate investment groups or subscribing to industry newsletters can help investors stay informed and adapt their strategies accordingly. This proactive approach can prevent legal issues and enhance the success of their real estate ventures. Diversification and portfolio growth. Diversifying a real estate portfolio is a smart strategy for mitigating risks and enhancing returns. By investing in various types of properties, such as residential, commercial, and industrial, investors can spread their risk. For example, if one sector experiences a downturn, others might remain stable or even thrive, balancing out potential losses. Investors should also consider geographic diversification. Owning properties in different locations can protect against local market fluctuations. For instance, if an investor has properties in both urban and suburban areas, they may find that one market performs better than the other during economic changes. This geographic strategy helps in maintaining steady cash flow and reduces the impact of regional downturns. Expanding into different investment strategies can also contribute to a well-rounded portfolio. An investor who typically focuses on long-term rentals might explore short-term vacation rentals or commercial properties. This shift can open new revenue streams and capitalize on varying market demands. A diversified approach enables investors to adapt more easily to changes in the real estate market. Reinvesting profits into additional properties or upgrades can further promote portfolio growth. Instead of cashing out all profits, using some to purchase new investments or improve existing ones can create compounding returns. For example, upgrading a rental property can increase its value and rental income potential, leading to greater long-term returns. Lastly, continually educating oneself about market trends and investment opportunities is vital for portfolio growth. Engaging in real estate seminars, reading books, and networking with other investors can provide valuable insights. Staying informed allows investors to make better decisions and seize opportunities as they arise, leading to a more successful and diverse real estate portfolio. As we wrap up our exploration of building wealth through real estate, let's take a moment to reflect on what we've learned. Remember, the journey to financial freedom doesn't happen overnight. It's about consistent action, smart choices, and staying informed. Have you thought about which type of property aligns best with your goals? Whether it's rental homes, commercial spaces, or flipping houses, each option has its unique advantages. The key is to start small, research thoroughly, and never stop learning. And here's a thought. What if you could create multiple streams of income through real estate? Imagine the possibilities. Visualize your future self, thriving and secure, all thanks to the decisions you make today. So, what's your next step? Are you ready to dive into the world of real estate? Share your thoughts in the comments below. Don't forget to subscribe for more tips and strategies to elevate your financial game. And if you found value in today's video, give it a thumbs up. Your journey to wealth starts now. Keep pushing forward, stay curious, and remember, every great investor started with a single step. What step will you take today?